This next problem is the master budget. So we are using the information that we're given here from Healthy Foods, and this company sells protein bars to health food stores. And we are going to be breaking this problem down into about 6 different parts. So I'll do a separate video for each part, and then you can replay them as needed. So the objective here, by the time we finish all 6 parts, is that you would have the company's cash budget for a period of a couple of months. So we're really trying to prepare the cash budget for January, February, and March, but you need to have the information for the sales for 2 months prior to January and for a month after March, because the 3-month period is actually impacted from a cash point of view from the previous 2 months, and it's also impacted by the subsequent month sales, which will become clearer as we go through this demonstration. So the first thing that we want to do here is make sure we understand all the information we're given. And so we are told that these are the number of units we expect to sell each month. We're also told that all sales are on credit, so there's no cash sales. And we're told here when the cash is actually collected. So 30% is in the month of the sale, 50% in the subsequent month, 15% in 2 months after the sale, and 5% was never collected. So they're, and that's typical of most businesses. It might not be as high as 5%, it could be 2%, it just depends on the nature of the business. So just as the company's sales are on credit, also when Healthy Food purchases its materials to make its products, it actually pays for 50% in the month of purchase and then 50% in the following month. And here you're told the dollar value of the direct materials that the company is purchasing each month. Okay, so now that you have that information, we'll look at the first one. So we are looking at your selling price times the number of units that you are going to sell. So here, your selling price per unit, we are told up here, is $4. And we are given the number of units that you're going to sell in January, which is 20,000. So 20,000 times your $4 per unit is $80,000. In February, again, it's $4 per unit, but this time you're selling 19,000 units. So 19 times 4 is going to give you a total of $88,000. And finally, the number of units to be sold in March, and that's going to be equal to 4 times the number of units, which would be 23,000, which is 92,000. So for the quarter, when we use the term quarter, we're talking about the 3-month period. So there's 4 quarters in a year. It's the quarter ending March, end of June, end of September, and end of December. So for the quarter or the 3-month period, the total sales will be $260,000. So that's what we mean by first quarter. You notice the term quarter here. So that concludes step 1.